welcome back to today's stream. So it's going to be a massive one today. Everyone's talking about the same thing. It's the US CPI and core inflation data. Very big one. We're already seeing a bit of movement in the markets already, a little bit of that pricing in, especially when we're looking on the lower time frames, and that's across Bitcoin, it's across the NASDAQ, it's across S&P, everything itself. AJ, how are you today? Obviously a lot that we are kind of anticipating and also trying to price in to see what's going to be happening to the markets.
Yeah, I'm doing well, thanks. I'm just excited to see, how the market sort of reacts to these figures that are going to be coming out, these CPI figures. So we'll see how the market reacts to it.
There we go. Charlie Thompson is he's ready to be buying the dip.
Yeah.
I mean, I'm ready to buy the dip as well.
Yeah. It does.
Sorry.
If we do, get numbers higher than expected, I think we are gonna see some more downside and just great buying opportunities, really.
Yeah, and guys, so we put a little bit of information about this already down on the Twitter page, so make sure you follow that there. But we've got about 11 minutes until we have the data coming out. So I'll just quickly run through a small bit of an overview as to what it is that we are talking about. So as you can see, it's kind of plastered all over the main news sites in anticipation. So S&P is down a little bit, NASDAQ is down a little bit. We did see a small kind of push to the upside, but overall it's been a bit negative because people are unsure. Why stay in a position when you don't know what's going to happen to it? So that's kind of leading us towards this. Right, well, everybody sell their positions and kind of put some, maybe some orders in. But yes, dollar has been actually really, really strong, especially as relative to other currencies, like the euro keeps falling, for example. But money markets are betting on a 75 basis point hike from the Fed, which obviously is bad for us now, but it's better for us in the longer term. Towards the end of the year, we should be able to see a little bit more of an uptick in the markets once we have everything under control, which is what we all want, really, isn't it?
Yeah.
That is the ultimate goal. So this is kind of what we're talking about: core and CPI based inflation. So I will tell you guys, look, core inflation is, and I can't remember the measure of what it is exactly. I've said it in a previous video, but it's what do I say? Goods, whatever. But it doesn't include food or energy costs, and that's why CPI, which does include food and fuel costs, is higher than core inflation. But the Fed only care about core inflation. They don't really care too much about CPI, which obviously is not great because that CPI is what everybody has to live with in their daily lives.
Yeah, those are the necessaries, aren't they? So
exactly,
that's important for the people like us, and
those are the things that everybody complains about. Like you see it on social media and everything. People are talking about the price of energy, and I guess it's convenient for them that they don't have to track food and fuel when two of the largest countries who are exporters of either food, and also then Russia, who are a large exporter of fuel, they've kind of they're obviously they've pitted a war, so it's not really teed up too well. But it's always been the case. They haven't just backed out because Russia are invading Ukraine. It's not quite like that. So we're going to get the data from here, guys. You can follow along. Obviously, we're going to be live during this in 8 minutes time. But we do see here the Consumer Price Index. This is where you can get it from the Bureau of Labor Statistics, or equally on an economic calendar. Any of the economic calendars will do it, but I quite like this one from Daily FX. And so, yes, what I wanted to just quickly mention, 75 basis point hikes. This is the kind of the interest rate. The Fed funds rate is how much it costs to borrow money. And so they increase this. We're pricing in a 75 basis point hike. And so that's why we see this kind of beginning to increase, this higher rate hike. Now we'll see how things go. We still have 2 weeks until the Fed and Jerome Powell, announce what the next rate hike is. But you can see this here. We're having a change. More people looking towards this higher rate. in 2 weeks' time. But there we go. AJ, do you want to quickly just run us through what are we looking like on the charts, or have we seen anything in the run up?
Yeah. Let me just share my screen quickly. So, looking at the chart, someone did just mention that PokerStars was pumping hard. On a shorter time frame,
Yeah.
It's having a nice little pump in the shorter time frame, but sort of on the bigger time frame, we're not really seeing much movement at all. But yeah, basically what I'm looking at on the Bitcoin charts is this bear flag. I showed it in yesterday's show as well. This is something that's going to be very, very crucial, today because of the CPI figures coming out. Last time we saw this sort of bear flag formation, it was a bit of a smaller one, but we did get those figures out. Where was it? It was here. So the 10th of last month, we did get those figures out, and there was a forecast of 8.3, but the actual figures that came out were 8.6%. So if we take a look at the charts, look at the 10th, you can see that the market was pricing in those figures of 8.3. But then when we got, those figures higher than anticipated, so higher than 8.3, we got that 8.6, we did see that massive leg down, hitting that price target from the bear flag. So if we take the flagpole to the breakout point, we hit that target perfectly, and that has played out. So this is, what's making me believe that we could see another leg down for Bitcoin, because if we do get figures that are around, higher than what is forecasted, so higher than 8.8, I think we are going to see sort of a bearish move for Bitcoin. We are going to have that next leg down, and that next leg down, if we take it from the top of this top of the flagpole to the bottom of the flagpole and take that to the potential breakout point, that gives us a rough price target of around $12,000. So if we do get those numbers out and they are higher than forecasted, then I think we are going to break to the downside out of this this bearish flag, and we are going to see that next leg down. As of right now, though, if we look in a little bit closer, you can see that last night we did close that daily candle perfectly on this support level that I drew a few days ago. So we are respecting this level very well. We are respecting this bearish flag very, very well. So because we have found support, and we are finding support as of right now, this confirms to me that this is a very, very solid bearish flag. And if we do break to the downside, then that $12,000 target is not something I anticipate, but it's something that we can't ignore, because as we look at this one here, the price target for that was hit. So the majority of the time, the price targets are hit out of these sort of continuation patterns. So 12,000 is something we just cannot ignore. If we do get sort of I can say sort of bullish figures, so maybe lower than 8.8, sort of maybe closer to that previous around 8.6, then I think that's going to be sort of bullish for the markets. And I don't think we're going to see a big pump, but I think just continuing to consolidate towards the upside, and holding this support here that we did establish last night, I think that's pretty realistic, and I think you can agree with that, Ben. But yeah. I don't think we're going to see a crazy pump if we do get those bullish figures. But yes. So we're just going to have to be waiting, and we are going to be here. We are going to be looking at the charts live with you whilst these figures come out, and we are going to see how the market reacts to this as well. We are at a very, very important level as well. We're sitting at $19,900 approximately. $20,000 is a very, very important level.
AJ, bring us onto like a slightly smaller time frame, because like guys, the reason why I think we're seeing this little bit of a pump that we are seeing right now is because the market is kind of beginning to price in that 8.8. So I've been listening to analysts all morning, and the general consensus is that we actually, fair play, we might see that 8.8, and that's kind of looking likely now. If it's looking likely and it happens, the reason why we're seeing this pump now is as long as investors all begin to say, oh, well, I think it's 8.8, I think it will be as well. Then what does that say about the Fed? What it says is, well, actually, maybe the Fed they now know what they're on about. So, and this is what exactly gives confidence during these times where if the Fed gets it right, assets will pump because investors believe in the Fed and they believe that long term, asset prices are going to come down. So, asset prices are going to go up because inflation comes down. So it's that kind of belief, but also just as you showed us earlier, AJ, when we had that last kind of flag to the downside, that was because inflation was higher than expected. And everyone thought, well, how are we going to deal with inflation when the Fed can't even predict what we're going to get as like a CPI print? So it all comes down to confidence in the Fed. I think that's why we're seeing that little pump, guys. So 8.8 will probably continue to see a small pump, but just as you said, DJ, long term, we're probably going to be ranging here for a while. I don't think this is going to be, boom, we're at 30K now. I think we're very, we're very far away from that. But we have 1 minute here, guys.
And there's still always is talk about the price going lower as well. So we do have to take that into account. Just quickly, I got an indicator just a few minutes ago that the price cycle bottom has flipped again. Well, it's not confirmed because we still have 5 hours left of this. 5 days left of this candle. If I've got to refresh it. It's not showing me the thing. So we have flipped, and there's about 5 days left of this candle close.
Let's have a look. AJ, let's bring us up onto. Can you imagine? Let's have a little question. Can you imagine 8.8 and a pump? Nightmare. No. I mean, I can imagine 8.8 and a pump. Yes, not a huge pump, but I think we can. But if you're pumping when it's 8.8% inflation, this is what I mean. Everyone will get excited. It might go up, but then, and it is why I'm worried about putting an order in, just above the price where we currently are. To catch that pump, it might be good, but it has to be a very small order because I think, very quickly we're going to realize that actually 8.8.
The numbers out now. Sorry.
Yes, they've just come out, as you've seen on the screen. So actually 9.1. Watch the market dump. Let's have a look. Let's bring up Bitcoin. Go on to let's say the minute chart. So guys, as you've just seen here, 9.1 CPI and 5.9. So 0.2 above what was expected in both core and CPI inflation. So what does that done to the market? This is the confidence, guys. This is literally what I'm saying. So
this is the confidence.
Yeah, you've seen it live, literally right here. So this again, we're going to see a 75-point basis hike when it comes in 2 weeks' time from the Fed, almost definitely.
How do you think that's going to affect the market as well?
Again, I think a 75 basis point hike. We're still that to be honest, this gives me the sensation that one, the Fed, they don't understand inflation fully yet. And now what I'm kind of thinking is, even if they get, it's 9.1 inflation, even if next time they predict 9.2 and it still hits 9.2, that's great, but you've only just found the bottom, and that's going to be in next month. So it's going to be,
9.1.
What is it? July, August. So, then you only just find the bottom, and then the bottom for, inflation is not the bottom for the stock market. So I think that's just going to extend this kind of down period, which is good for us if we're buying stocks, if we're, buying Bitcoin or whatever. What about you, AJ? How does this make you feel seeing this kind of 9.1% inflation year over year?
Well, for me, great buying opportunities for crypto. That's what I see. But as you said, sort of the Fed, I just don't think they sort of know, they understand inflation as well. And if I'm right, it's the same as the UK inflation as well. That's at 9.1 as well, isn't it?
Yeah.
And the UK markets took a massive hit when when that happened as well. So I'm expecting to see a big hit for the US market as well, and that's exactly what we are seeing right now. You can see that the Nasdaq is having a pullback as well. I'm pretty sure the markets are going to be having a pretty substantial pullback. If we take a look at Ethereum, the shorter time frames, Ethereum's having a pullback as well. So everything's really just going to be having a pullback.
Nasdaq is. I'm just seeing now. So I brought it up on Bloomberg, but Nasdaq down by 2.3%. S&P futures down by 1.6%. Literally, just all of the traditional markets kind of falling off the cliff, especially on those on those lower time frames. Just seen here. This is going to be in the floor by 4:30 p.m. EST. So that's the end of the trading day. I think even by within 1 hour. So this, bear in mind, guys, this news has come out before the traders are actually allowed to place their orders in the stock market. So if they had any orders, pending, which a lot of them would have, then you're obviously going to see this is going to have a massive push to the downside. And imagine when you get into work, most guys are going to be at the office watching this now. So they'll be sitting there, and then they won't be able to place their orders on the traditional markets. They can buy futures, but that's where we see kind of the futures market and everything kind of pulling to the downside. Let me bring up, where was I here? So this doesn't give us like a full. I want to bring like a full list of all the assets and kind of just give you like an overall picture as to what we're seeing across the. Okay, yeah, this is okay. I'll bring up. Let me just quickly share my screen up on here, so we can actually see this. This is the forex pairs. So forex pairs, euro against the dollar. So I mean, weirdly, the dollar's kind of getting stronger, but that's just because the rest of the country is rubbish, and the rest of the world. And if the US is this high inflation, then everyone's thinking, well, the rest of the world is going to be absolutely ruined. So let's hold the strongest currency, which is the dollar. But yeah, we see oil slightly down, indices. So the US 500, let's look at the US 100 tech. So that's the S&P 500, that down by 1.6. The Nasdaq 2.39. Still continuous movement to the downside. The DAX, the FTSE, and then we kind of get into like other stocks. But then crypto, see this down. Ethereum up on the day, but that's swiftly changing. That is swiftly changing.
Yeah, I still think that the S&P can see some actual more downside. If I just bring up my chart quickly, so before COVID, this COVID crash here, when we saw this massive dump, we were expecting this support level quite nicely here. Ever since sort of 2008, we were going up in this sort of steady sort of momentum. And COVID sort of broke that trend, and then we saw a massive increase in the S&P, breaking above that resistance as well. And now we are sort of getting that reset, and I think coming back down to this yellow support level here is something pretty realistic on the S&P. And that means that the Nasdaq is also going to be coming down, and that means for me sort of the crypto market is going to be having sort of another leg down as well. And I think sort of this inflation. 9.1 inflation has sort of confirms that for me now, that we are going to see that next leg down.
Yeah, guys, drop some questions in for us if you have any. It'd be quite interesting to see what people have to ask, or even what you guys think. Obviously we can see overall markets are dumping. Again, just to kind of reiterate, we're seeing that people just don't really have faith at the moment, and like I said, so volatility is up across all the markets. That there's a thing that measures this, is called the VIX. It's a really good thing to look at, especially in times like now. So that's actually something that's really, in my opinion, really easy to trade, is called the VIX. It's basically a volatility index. So when there's big news, obviously there's going to be more volatility, so you can kind of like go long on that, and then when there's less volatility or there's less news, you can just go short on it. But
Bitcoin, how long can you go? Is it low? Can you go or long?
Probably. I mean, go, yeah. How low would you go? What's your Do you want to
Well,
bring it up, AJ? Come on.
yeah,
I
you
know you
know,
want to do it. I know
you
you
know
want
I
to do
like
it,
it.
guys.
Yeah,
It is,
so
to be honest, it is good. I can't deny that. But
yeah. So for those of you that don't know, this is the Bitcoin price model. What we're looking at is the pink line here, CVDD. This indicates the bottom every single time for for the past bear market, has predicted every single bottom the past bear market. So back in 2011, you can see here that we found perfect, but it's quite hard to see because it likes to scroll over it, but here we
yeah,
perfectly
let's get
predicted.
us off the screen. It'll make it a
There
little
we
bit
go.
bigger.
Yeah, so it perfectly predicted the bottom back in 2011, and that was around sort of $2,000, the $2,000 level, I think. Yeah, not $2,000 level, sorry, the $2 level. And then back in 2015, it also perfectly predicted the bottom. We found perfect support along that pink CVDD line, and that was around $172. Then back in when was this? Back in 2018. Again, the CVDD perfectly predicted that bottom at around $3,250. We came close to it during 2020 COVID, but that wasn't, a real bear market for me. So for me, it didn't matter that we didn't come down to that because it wasn't a real bear market. But as of right now, the CVDD is sat at $15,500. Can you hear me, Ben?
Yeah. Sorry,
Yeah.
I was just talking to myself. Someone put a question in that I like.
Yeah. So $15,500 is where the CVDD is currently sat at the moment. For me, this CVDD, is the bottom. So whatever the CVDD is telling me, that is going to be the bottom because it has predicted the bottom every single time. Now, when I first showed you this, it was sat around $15,300. So it does vary slightly, sort of as time goes on, but only very slightly, only by a couple $100 at a time. So that's where I think sort of the bottom is going to be for me. We are very close to that. We are below 20,000. And from 60,000 to where we are now, what is another move from where we are now to 15,000? It's nothing at all. So I think, that is pretty realistic. And another reason why I think that this is, going to be a pretty realistic move down to 15,000, or maybe even lower as well, is because if we have a look at how far we have gone down from the all-time high, we are currently at around 72%. Now, if we go back to a previous bear market, this is the wrong chart to be looking at. If we go back to a previous bear market, so the 2018 bear market, from the all-time high down to the bottom, it was an 84% correction. If we go and have a look at another bear market as well, from the all-time high to the bottom, an 86, a little over 86% pullback. And, as of right now, we are only at 72. If I just show you that again, we are at around 72, 73% pullback, meaning for me, there is some more downside. Now, say we came to 80%, that would bring us all the way down to around $13,700. Say 85%, that could bring us all the way down to 10,000. Now, do I think 10,000 is going to happen? Personally, for me, no, I don't think that's going to happen. But looking at this bearish flag now, for me, 12,000 is pretty realistic because we have had this previous bear flag, which the price target was hit. We've had these inflation numbers at 9.1 now, and that is very bearish for the market. And we have this bearish flag here. So for me, it looks pretty likely that we could hit that target of around $12,000. So we will just have to see. I know that someone did mention, let me just scroll back a bit. I forgot what they said now, but it was relating to this about sort of when to short. Should we go short or wait for the pullback and then short? I can't tell you what to do, but personally, for me, what I'm going to do is I'm most likely going to go short when we do, break out of this this support level here. When we do break out of this flag, I will most definitely be going short and seeing how low we can go. We do have that target. If we do break to the downside, there's still 11 hours left. We do have to take that into account. But if we do break to the downside here, the target is technically around $12,000. So, personally for me, this is a pretty good shorting opportunity from here, and seeing if I could get as close to that 12,000 as possible. If we take a quick look at the indicators, the indicators are telling us that we are sort of pretty oversold at this time. You can see, pretty close to the bottom, but this sort of did happen last time as well. This last time we're at the flag, the indicators were pretty oversold, but we did just get that rapid pullback down, and that is something that could happen again. These indicators could just be ignored, and we see a pretty quick pullback down. When we did break down out of here, it took about 5 days for us to sort of hit that target. So that's a pretty that would be a pretty quick move if we did break down and then see that move in the next 5 days. And that is something that is very realistic. The indicators are very oversold, but if we see that rapid move to the downside, then sort of those indicators are just sort of forgotten about, and Bitcoin just does whatever it wants to do, really.
Yeah, well, that's the thing. That is genuinely what everyone is kind of worried about. I want to tackle some of these comments, guys. Make sure you keep dropping them in. Love to see it. So looking through, we'll kind of just keep up the Bitcoin chart on maybe like a lower time frame here, AJ. So we give people something to look at. So what leverage is safe in these more obvious conditions? To be honest, guys, at the moment, I personally wouldn't be looking to leverage too heavily, just because we really don't know. They could just have like a really strong area of support on the way down if you are shorting. So, I would be sticking to a lower leverage level than usual. Because yes, we're in a bear market, so if we're trading sideways, there's not really much point in leveraging, because you could just have an event like today that breaks through like loads of major support. That's kind of my thought about leverage in times like these, where we're unsure as to whether we're actually going to keep this level of support and bounce up, or what's your thoughts, AJ?
Yeah, well, as you said, little leverage, because and you mentioned support. There is actually, I was just bringing it up here, there is actually sort of quite major support around that $18,000 level. We came and wicked down to it back on the 18th of June, and if we scroll back a little further as well, when we were above it, we were using it as support. So there is support that could hold us up. So maximum for me, I'd probably be going in with 5x leverage. 10x leverage is a push for me anyway, but for me right now, sort of 5x leverage is the most I would be doing, and maybe not even that, maybe 3x leverage, because I'm pretty certain that we are going to see another leg down. But again, we are getting to those levels where they are very, very big buying opportunities. And, I think we are close to that bottom. We can't predict where the bottom is going to be. But, I think we are going to see some pretty big moves towards the downside, but also towards the upside as well. So you just got to be quite cautious with how much leverage you are using.
Mm-hmm. Especially with volatility, because volatility is extremely high, and that is like the number one reason as to why you shouldn't use leverage. It can be really good if you know where the bottom is, or where the top is, or something like this. Obviously it amplifies the wins, but in a time like this, that's my reason personally for being a bit cautious. But we'll move on to the next one. So this is going to nuke by 4:30 p.m. Eastern time. Full nuke traditional markets. Yeah, we had someone else also say that as well. Here, full nuke by 4:30. Let's see how this trading day goes. Like I said, guys, there's still like 45 minutes until the American Stock Exchange is open. So we're not quite there yet. Are we in any shorts? Kind of just covered that off. Not yet. We want to see on a slightly larger time frame, like a solid close.
I want to see a confirmation to break to the downside of this level here.
Yeah. AJ, take the next one. I'm just going to quickly. My dog is going on a mad one.
Right. Where are we? Where are we? Yeah, so just to add on to that, when we do break to the downside here, that's when I'm looking to be going short. But I want that break. So you can see there's 11 hours left of this candle. I want to get a confirmation break to the downside. I don't want to get in early because that's when we could get caught out. Sort of, I lost where we were on the questions, Ben. What was the last question?
Are we in any shorts?
Oh, yeah.
Which yeah.
It's
So
some.
then, oh sorry, not sure if you've got answered that.
No, I don't think I have. I'm sort of trying to find where we are because there's quite a few comments.
I know. So I'm at health plan. This is the opportunity to get into
There we are.
Bitcoin before Q4. This is yeah, I agree.
Yeah,
I agree. I don't know how long it's going to go on for, but I definitely think this is a very good time to be getting in.
this will be a good one for you, Ben. How likely do you think a 100 basis point rate hike on the 27th of July is taking into consideration the 9.1% figures just released?
So it's actually a very good comment. I was having a look at this. Let me share my screen and bring up the right. No, that's not the right one. This is the right one, but it's also not the right one. Fed rate monitor tool. So this is so what we see. Obviously the headline 4-decade high of 9.1. My concern is that we might end up with some kind of like Paul Volckering situation. So this is a 75 basis point hike, and this is literally just changing like as we go. It's absolutely unbelievable. So we saw like yesterday there was 10%, now it's a 31%. I think later on today we're going to continue to see this climb higher. So this is a 75 basis point hike. I definitely think we're going to see this at least 100%. I would put that at maybe like a 20% likelihood. It depends over the next 2 weeks how we see the rest of the market kind of react, because I don't think, well, Jerome Powell doesn't really care about the markets. That's one thing to kind of keep in mind. But also, they don't want to do a Paul Volckering, which is a Paul Volcker is basically they just say, okay, look, if the rate is 10%, let's bring the interest rate to 11%. If inflation is at 10%, let's bring the rate to 11%. So just bring it over. And Paul
Yeah,
Volcker, I believe, for 2 years had interest rates above 17%, which is absolutely crazy considering that we're complaining about like 2.5% and all this,
yeah, yeah,
So you can imagine what kind of happened there. That's what I'm looking at. I'm
yeah,
going to keep an eye on this. I think the likelihood, like I said, about 20%, but primarily, I think we're going to stick to that 75. But then I think we're not going to see the traditional 50 that we were expecting here. I think we're then going to start seeing, and this is a 75. So the most likely at the moment is a 50, but I think this is going to change. A 50 and then again another 50. That's
yeah,
currently. I think it's going to be 75 and then another 50 or even 75. And then I think it'll only start coming down maybe to a 25 in about December or something like this.
yeah.
That's that's my current thoughts on that.
Someone said USD is
Sorry, mate.
pump.
Just
Someone said USD is pumping. Oh, I just brought up that chart. Yeah, the strength of the dollar is, DXY still continuing to pump. We are broken above this major support level. You can see previously major support, and I haven't got it up at the moment, but I normally have this up against the Bitcoin chart. When we get rejected here, we normally see a massive pump in Bitcoin. And because we've broken up here, for me, we are going to see more. That this is more confirmation for me that we are going to see more downside for Bitcoin because we have got this break of that resistance. And it's not just a slight break. This is a pretty big break above this resistance level. So I think we are going to continue to see some more downside for Bitcoin. And this is just more confirmation for me, really.
Yeah, no, I agree, and also you can see it in other areas of the world. Ultimately, so look at other numbers: furniture, tires, complete broad-based destruction of economy. You are absolutely right. Computers 1.3. Also, you've got to take into account the semiconductor shortage. It's not something that many people talk about anymore. But there is a massive semiconductor shortage. Also because like Ukraine supplies 90% of the chip grade neon. So like the neon that's like good enough to make chips, and 90% of that from the US or for the US comes out of Ukraine. And then, we also have to consider the fact that China and their lockdowns have really kind of hindered the economy in a very, very big way, such as production numbers coming down massively. What is the CVD? Someone answered this quite nicely, actually. It's the
CVDD.
I've just refreshed.
I can get the
Oh,
definition.
no, you're right.
CVDD. I don't know the definition off by heart.
Cumulative value days destroyed.
Yeah, that's it.
So it measures the value to time destruction as a ratio, apparently.
Yeah, that's exactly it.
Yeah, okay. Health plan? You are correct. I think everyone's going to bloody need a health plan. We'll all end up with like a heart attack at the end of this, won't we?
Yeah, we're all going to end up with stress, ripping our hairs out.
Exactly. And for today, are you looking at futures on SPY based on what do you think for today? Go to 17. To be honest, I wouldn't be looking to trade the futures today. I think it's too volatile, especially for the SYP. I'm going to assume that's SPY, the Standard and Poor's index. That's the SP 500 for everyone. This I don't know. I personally would stay away from it. I don't know enough about the previous few bits of movement in order for me to trade it. So, given a day like today, I don't feel like I need to be in the market. So I'm just going to take myself out.
Yeah, I just want to bring this to everyone's attention quickly. I think I forgot to show everyone. Just this price cycle indicator has just flipped. I just want to warn you of that. There is still 4 days and 12 hours left of this weekly candle close. When this flips, for me, that's sort of going to be the confirmation for the bottom. Because the last time that we have seen this flip, so if we go back here, it has perfectly predicted that bottom. And then if we go back even further as well, you can see that back in 2015 as well, when that flipped, that perfectly predicted the bottom. So there is 4 days. So I think this is indicating to me that we could actually be establishing that bottom this week, in the next 4 days and 12 hours. So for me, this is a very, very important week, and because we've had this inflation at 9.1%, that's confirmed that next leg down for me, and that's confirmed to me that we are going to pretty much have this bearish cross here, and for me that's sort of the confirmation for the bottom for Bitcoin. So I guess we'll just be waiting to see how far it can go.
Yep. And then what else do we have further down? Nothing is coming down. The deflation theory so far is not playing out. No, you're right. We may go to 100 basis points next time. We absolutely could. I think if we go to 100 basis points, again, that's going to be another thing where it's like a massive crash down, but then eventually people will be like, well, it is kind of good, I guess, in the future. But initially, it's going to be really, really bad. They will get more aggressive. Yeah. Health plan is absolutely correct. Guys, it's terrible. The Fed are going to get more aggressive. They have no choice. Nobody knows, nobody believes in them, I think is probably the sadder thing. Just lowered Bitcoin top and trapdoor on alts. Yeah, guys. I mean, look, we've said this before, Bitcoin's going to make the moves first. Yeah. And then alts will follow.
Yeah, we've been saying this for a while, and for me personally, I'm just staying away from those altcoins. Just for now, most of my portfolio is in Bitcoin, because if we're going to get this next leg down, which I do anticipate, then the altcoins are going to have a much bigger leg down. So just be careful of that. Just be careful of what altcoins you are investing into. And make sure, if you are investing in altcoin, make sure it's something that you believe is, going to be, very important and very useful in the future, on the fundamental side of things.
You're breaking up a little bit here, AJ. I don't know if it's me.
I think I keep getting Wi-Fi warnings, so it might be me. Give me 2 seconds. I'll just go and open the door.
Lol. Okay, guys, let's bring this back up again. Right. Bomb. Let's have a look at this. Let's have a look at this. Bring this up. Good to see. Just going to go through the quick headline. Again, we'll just, I guess, go through what's the target for daily close. Oh, that's a very good question there. Akeshi, target for daily close. That's a $1 million question. That is, or it could be like an $18,000 question.
Yeah.
AJ, do you want to have a quick look at that and then see if you have an idea? I think it's probably going to be near a next level of support.
Let me have a look
to
at the chart
downside.
quick, and I'll just see if I
Mm-hmm.
can. I think, yeah. So I think 18,000 could be something realistic. You know, if we continue to see this price action towards the downside, because there is a level of support. I'll just quickly show my screen. There is a level of support at 18,000. Right, gotta get the pen up right here. So 18,000, is sort of a realistic target, I think, if we do continue to see this price action towards the downside. But as you said, that's $1 million question. It's a lot easier to predict sort of what the price is going to be, but it's very, very hard to predict at what time that price is going to be. Almost impossible, I think.
Yeah, I mean, I'm like, I'm on the verge of calling AJ a witch and setting him on fire. When someone can predict it that well, that's, if you did that back in the day, you'd get called a witch and thrown into a river with some concrete shoes on.
Yeah.
I like this from Health Plan. 100% go to 50 basis points next round. Yeah, it's I'd be interested. I want to see what he says in the next couple of weeks and what how he reacts to this. This is Jerome Powell, by the way. How he reacts to this, and also how the market does. Because he says he doesn't care about the market; it's not his job. But at the end of the day, who is his boss? It's a guy who has a lot of pressure from a lot of financial guys and who gets a lot of funding from financial guys. So, they have a lot of sway on the president, and he obviously has a lot of sway on Jerome Powell. So, whether that actually does have an effect, I don't really know, but I would think it probably does. Do you want to go through any of these comments?
Yeah, I'm just looking at some now.
Devin Smith, you absolute joker. Love to see you around, by the way. Always good to see you. I see you and Akeshi becoming besties, which is always good to see. But if we could long the number of new alcoholics this year, I would. Yeah. Yeah. I mean, maybe for once, someone being a DJ is actually a really good thing. Not that we wish that on anyone, peace and love to everybody.
Yeah.
Gurav, do you expect crypto to nuke further down when S&P 500 opens in a while, or the CPI hike is already priced in for crypto? I don't think it's fully priced in. I do think that the crypto market is open, so the crypto market can be traded. The S&P or the normal traditional markets are not open. So although you can buy futures, that will affect the price of the S&P when it opens. But I don't know the proportion of how many traders buy futures or buy the actual indice, but not futures. So I think that we will see some downside for the S&P, and I think we will probably see some downside for Bitcoin.
That'll lead into the crypto market almost definitely.
Yeah. I think you are right. So nuke, I don't know, but I don't know what's like a kind of a small-ish bomb, but not a nuke. A big bomb, but not a nuke.
Grenade. I don't know.
Or like, yeah, maybe. Or like those cartoon TNTs. We'll get one of those out.
Minecraft TNT.
Yeah, yeah, exactly, something like that. I was thinking more like Looney Tunes or something, you know. As of this time, we are at 90. No, 90. What would be the key indicators for you to go? I mean, look, solid win. For me personally, I think that technical indicators at the moment are not going to hold up. Maybe as the day progresses, they will. But I think at the moment, technical indicators are not necessarily going to hold up as well as they should be, because like it's just panic.
Yeah.
It's mania, and so people will be maybe going long. They might hedge their bets by going, or sorry, they're mainly going to be going short, but they might be hedging their bets by going long. But I think times like now, the key indicators are quite hard to predict. I would say the main ones that are probably valid are only really support and resistance levels.
Yeah. Yeah.
For me anyway, AJ, what would you add into that?
For me, the only thing that I'm looking at, in this period of time right now, is this bearish flag. If we do break to the downside here, for me, that indicates more downside. So sort of in the next, 4 to 5 days, this is what I'm going to be looking at mainly. We get that break to the downside. I won't really be looking at anything else. We do have the support at around $13,900. So that's something I'll be looking at as well. But indicators wise,
Okay.
not really. I'll just be looking at technical
Yeah.
pattern and obviously this pi cycle bottom indicator, which closes in 4 days and 11 hours. So that's going to be something very, very big that we are, going to be keeping a very close eye on.
Yeah, and to be honest, just to answer Jeremy's question, I think that's going to be quite soon. When will we look to begin accumulating Bitcoin? So I've said I think anywhere under, for me, anywhere under like 22K, I'm quite happy to be buying. We have already made a couple trades where we have bought. You can see, is this been refreshed here?
So yeah,
This is live,
also,
is it?
let me just get the field one. So you can see that we've had these filled. So we've had, for Bitcoin, we've had the 20,000 filled, and we've had the 19,000 filled, and we've had the 18,000 filled. Ethereum, we've had the 1,000 filled and the $900 filled. So we are, as of right now, dollar cost averaging into Bitcoin. We showed you this in our bear market portfolio strategy video. So if you haven't watched that, make sure you go over and watch that video. But we still have some orders in place as well. So we still have orders at 17,000 for Bitcoin and 16,000 for Bitcoin, and at the CVDD bottom at $15,500. And then Ethereum, we've got one left at $800. But I think I'm going to add another one in for $700 as well, because I think, if Bitcoin comes down as low as sort of $15,500 and even lower than that, then I think there's a possibility that Ethereum could go down to $700. So to answer that question, we are already accumulating. We are dollar cost averaging in. And as of right now, if I just go back to,
and just to add into this while you do that, AJ, is guys, we have these orders in, but this doesn't make up all of our allocation of Bitcoin or basically our portfolio. We still have a little bit of cash because we know that we could get down to that, I don't know, 12,000, 13,000. We think the bottom is going to be around about 15.5. But also we have a little bit of cash just in case we go a little bit further. We always have to have a little bit of money on the side to take advantage.
Yeah, that's hit the nail on the head there. Yeah, exactly. You always want to have a little bit of cash. So this $5,000 portfolio, it's in around $150 profit as of right now. We also do have this one here, which is the Bybit account, which is in around, I think last time I checked, it was around sort of $25 in a profit. That's a $500 account. But I'm expecting these to go into a loss again, and then hit our buy orders, because I do think we are in for another leg down. So we're not too worried about sort of the profit here yet, because we want to fill the rest of the orders and we want to get as close to the bottom as we can. And then when the bull market comes around again, then we're going to see these accounts absolutely explode.
Yeah, absolutely. And the mania around, so solid win, the mania around Bitcoin must be an opportunity to make some serious cash. It is, it is. But it's only an opportunity to make serious cash if you get into the market. And this is one thing, like anybody who's here watching this, I see there's 92 of you right now. Obviously, great to have you all here. Make sure you smash the like button, subscribe to the channel as well. But we all say, oh, I love Bitcoin. We all know someone who was talking, what should I do about Bitcoin, blah 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 blah, back when it was like 40k, 50k, 60k, almost 70. And now it's down, and it's actually a really good buying opportunity. Everyone's a little bit scared. So it is a great time to make money in Bitcoin. But the reason why you see some people who go, oh yeah, I've actually made loads of money in Bitcoin, is because they were buying when nobody else was. And this is one of those times. So yeah, that's why, like you said, we don't mind going into a little bit of a loss on some of these wallets, because we're pretty confident long term we're going to be bouncing massively up again.
Yeah, so it's like that meme, isn't it? Where there's like two stalls, and everyone's lined up at the stall that says 60k, and no one's lined up at the stall that says 30k. So you want to make sure you're at the 30k stall buying Bitcoin then, because right now this is not where you make the money in crypto. This is where you accumulate. The money is made in the bull market. This is where you just dollar cost averaging it. This is the perfect opportunity to be dollar cost averaging in, buying Bitcoin at 75% sale, and waiting for that bull market. And that's when we see the portfolio explode.
That is true. Very good question here from Evan. If Bitcoin goes down to 10.5, would you sell what you bought at 17.5 and buy back in? Or 17 to 15, I should say, and buy back in. AJ, do you want to answer this?
Personally, for me, no. Because I'm always going to be dollar cost averaging in. I wouldn't sell. I never sell my crypto. Well, I try my hardest not to sell it. If I have to, then I have to. But for me, I am just holding until until sort of that next end of that next bull market. But for me, I am just continuing to dollar cost average in. If we go below 17,000 again, we hit 15,000, and then we go all the way down to 12,000 and then 10,000, I'm just going to be dollar cost averaging in. Every 1,000, I'll just be putting another big buy order in. And to be doing it that way, because personally for me, that's the best way to get in, because we can't predict where the bottom is going to be. You can say the bottom is going to be 10,500, but it might not make that. We could go down to sort of maybe 12,000 and not get below that level. So that's why dollar cost averaging is for me is the best. And I do have that target of around $15,500, but that is probably not going to be the exact bottom. Around that vicinity for me is going to be the bottom. But $15,500 is not going to be the exact bottom. So that's why dollar cost averaging in for me is just the best strategy to do. So no,
I agree. And also, if it's at 10.5, it depends. And this is what I think, a lot of people, obviously we have our strategy and AJ's just explained that, but I think for a lot of traders out there, it's a case of, well, how long is it going to stay there? If you just look up your phone and it's at 10.5, but you're looking at it and it's had 2 or 3 candles confirmed, but it's only on the hourly chart, that doesn't give you a solid foundation that, actually, okay, this is the absolute bottom, or the trend has been confirmed. So I'd rather be in something that I feel has a very strong support at 15 than, no support, or you don't know how long it's going to be there, or, something like that at 10.5, because I guarantee if it drops down to 9.5 or 8.5, for most people, their psychology would say, I'm an idiot, I messed it up, I should have bought lower. Let me now sell and kind of get in again. And each time taking a slower loss on your portfolio every time you sell at a loss, which is kind of it's not great for the mentality. So I'd say have your plan no matter what it is, and kind of stick to it.
If Bitcoin there's a lot of people saying out there, that Bitcoin is going to go to 1 million. If it does go to 1 million, it doesn't really matter if you bought at 10,000 or you bought at 17,000. When it gets to 1 million, or if it gets to 1 million, this it doesn't really matter. You could have bought at any price but below 20,000,
Yeah.
and you'll be living the high life. So yeah.
Yeah, exactly. Yeah. You might just not have like an extra bottle of champagne, but everything else will be okay.
Yeah.
um, what I'll quickly do, guys, is I'm just going to see. I know that there's been a few people who are obviously watching now who might not have seen at the beginning. So just quickly to recap for everybody who's watching, as we see from JS, smash that like button.
Yes.
Also subscribe to the channel.
Helps us out a lot.
And yes, exactly. So let's have so just a quick overview, guys. So what we're seeing from the markets is very much this. Inflation came in at 9.1%. What a loser. Here I haven't even got it up there. Bring this, go over to today. So we see inflation came in at 9.1%, and this was, this was 300 basis points, or 0.3% higher than what we anticipated, than what was forecast, I should say. Only 0.2% higher than what was forecast for the core inflation, which is the one that the Fed actually care about, because this doesn't include food or energy prices, whereas this does. And so that's why this one is so much higher. And so you can see this from the CPI, the labor statistics. You can have a look at that there. So the question then becomes, now that we've seen these higher rates, look, in 2 weeks, we're going to have a decision from Jerome Powell and the Fed around how much of an increase we should have in the basis point hike. So we see this now, even as we're talking, this has reduced. This kind of 50 basis point hike has now been swapped out for this 75 basis point hike. And this is what the market is immediately planning in, or I should say factoring in. And you can see this massive change. Yesterday, this was just a 10% chance. And today, after the print, we see it at 41. So some people are now even saying, look, well, what if we see over the next couple of days, people still worried about inflation, the market may be bouncing? Is it that we're going to need 100 basis point increase, which would bring us to 2.75 as the base? It's not even on here, but I'm pretty sure it will be in the next couple of days. So this is one thing that people are worried about. If we see the inflation continue to run away as it has, we'll see more downside for the markets, because the markets they just don't have faith in the Fed. And so everyone's selling off. Everyone's worried about a recession. And so therefore, nobody's in the market. They're holding cash. This is why US dollar is getting stronger, because they're holding cash ready to actually jump in when the markets are good.
And you can't really sort of say they're doing anything wrong. That's probably sort of the smartest thing to be doing, holding cash and waiting to buy lower. But you never know where the bottom is, and a lot of people are going to miss the bottom. So that's why again, dollar cost averaging best strategy.
Yeah, no, absolutely. And also, so just another thing why I think next month might be worse, or next inflation print might be worse, is because now, maybe not core, which doesn't really matter, like I said, for the Fed so much, but because we're seeing across Europe, we're seeing that Russia has turned off the gas supplies to Europe, and there's worry that that's never going to come back. Hence why everybody is kind of buying gas, which is bought in dollars because it's the global reserve currency. Oil is sold in dollars, gas is sold in dollars. So people are selling euro across Europe to buy dollars, hence why this parity is now down for the first time in 2 decades. And so this is meaning that we're seeing gas prices, energy prices kind of increase, and it has done for a while. We have seen a bit of a pullback. I know, I'm very well aware of that. But right now, the government, President Biden, he's going to Israel, then he's going to Saudi, and he's going to Saudi to ask about getting more oil. So the increased price of oil, I think that's going to keep inflation high for a very long time. CPI anyway, maybe not that core inflation number.
Yeah.
And on Friday, guys, just to make sure that everyone's aware, Friday we're looking at this Michigan consumer consumer sentiment. This is like, as a consumer, do you think you're going to be better off or worse off in, I think it's a year, or is it 2 years? But yeah, so each month there's a minimum of 500 interviews, and this kind of gives people an idea of what do the consumers think we're going to have in terms of inflation. So those are the big overview, big recap of what we've just been through, summarizing that in, for everything we've gone through in an hour.
Yeah.
There we go. Any other questions, guys? We have 12 minutes until the US stock market's open. So until we see the New York Stock Exchange and everything like this, perhaps we could just quickly bring up the futures. What is going to show me El Futurado's markets? Let's go. Can we just go to all of the markets? That would be better, wouldn't it? Here we go. Okay, boom. So here, obviously, we're looking at the futures because the markets are closed. You can't trade them. So these are the futures. Japan up, gold down, but very slightly, which is actually strange. That is something I didn't expect. Obviously, the DAX, the S&P, very much down. And then, kind of the same across the board, really. I think it was a little bit worse. We're seeing a little bit of a relief now. But I think there's a little bit of buying the dip happening today. But overall, over the next week, I'm kind of expecting more movement to the downside. Pretty much across all markets.
I've just been having a look at some of the tech stocks, and the pre-market is down. So when the market opens, I'm pretty certain we're going to see a lot more downside.
Yes, exactly. And if you guys are trading stocks at all, just make sure that you are aware of what earnings are coming out. This on Friday, we're seeing lots of banks. So those will be happening on Friday. Nice. Little Lamborghini just rolling past my window. But he hasn't accelerated. He hasn't driven it like a Lamborghini should be driven. Yeah, exactly. Oh, loser. He's doing the speed limit. So, okay. Also, just have a thing here comment from Ralph. Took a short 5x at 1980, 5 minutes before CPI release. Ralph, you probably made money off of that. It's a little bit of a risky move, but fair play. You obviously would have made money from that.
Yeah.
What's the price of Bitcoin now? Where are we at now?
We're at 19,000.
19,000. There you go. So that is the thing. Obviously it could have come on. It could have come in under expectation, and Ralph, you would have hit your stop loss. But obviously, whether you knew something that we didn't, or doing research. And this is the beauty of being able to do a bit of research and listen to analysts and stuff. You can kind of gauge roughly what people think. But like I said, I've had Bloomberg in my ear for a lot of the morning, and analysts have been saying, look, we kind of are pricing in, that 8.8, which, so the 9.1 was a bit of a surprise. So risky move, but fair play. Well done. Raphael again, 3 black crows, bearish Japanese. Oh, okay. Yeah, 3 black crows. Nice. That's a very cool, very nice little move you took there. Hopefully using a stop loss as market tumbles down. Yeah. Move your stop. Yeah, that's one very good thing, Ralph. If you have a stop loss, move it, secure your profit, because we're going to see volatility in 8 minutes when the market opens. So and he says always. There we go. Always use protection, boys. That's one thing. Always use protection. Number one rule in life. Okay. All right. AJ, is there anything else you want to cover off?
No, I think that's it. I think just sort of the chart of the week that we're going to be looking at is this Bitcoin pi cycle bottom. It looks like it's about to flip. Has predicted the bottom of the last 2 bear markets. So we'll see if it can predict the bottom of this bear market as well.
Yeah, inshallah, it will. Obviously, has done previously. So
Yeah.
let's have a look, see what it is. But yeah, let's come back to you tomorrow, guys. We'll give you a recap as to what happened later on today, obviously throughout the US trading day. And then also, I think we're going to see a bit of a reaction in the price of Bitcoin in the Asian trading session tomorrow morning, or
Yeah.
like you know what I mean. By the time we get on, we will have had the Asian and European trading sessions. So we'll see how they react to the US reacting to what's happened just now in terms of the CPI data.
Yeah.
All right. Well, look, without further ado, thank you very much, guys.
Yeah.
Good to have you around. Always happy to answer your questions. Make sure, like I said, hit the bell notifications. Usually we go live at a fairly consistent time. But yeah, hit that like button.
Yeah.
Thanks for coming by. Solid win. And we will see you all tomorrow.
Yeah. Thank you for watching.
All right, guys. Always use protection.
Quote of the week.
See you later, Devin. Yeah, exactly.